Hello, hello. Happy Tuesday. Welcome back to the show. I hope you had a beautiful weekend. If you're joining me live, of course, you know we are here on several different platforms. I think 8 or 10 different social media platforms. So wherever you are, don't be shy. Jump in. We're going to be having a really fun show today. And of course, if you're joining me on replay, thanks so much for watching. Let's get started.
Welcome to Level Up with Winnie Sun. Market update. Speed round. Award-winning financial pro. And now, get ready. I present to you Level Up with Winnie Sun.
Hello, hello, and welcome to the show. As you just heard, I am Winnie Sun, your host, Forbes contributor, CNBC council member, and award-winning financial pro, here to keep you on all topics of interest. All topics of business news, of course, that's going to be relevant and maybe some things that you can actually use for yourself. But most importantly, what makes our show special, as you heard from the beginning, is we are actually live. So I actually can see your comments. So don't be shy. Let me know where you're joining me from, how you're doing, if you had a beautiful weekend. We love to hear that, right? Now, of course, not a ton of business financial news today, to be honest with you, but what I really want to do is jump in with some good news. Today is the last day of the month, and we couldn't, just let this slide by because the Dow closed up 368 points today. The Nasdaq up also 190 points, and the S&P 500 also up 58 points. The stock market finishes January very, very strong. In fact, the Dow has gained over 350 points. S&P 500 also had its best performance in over 4 years, which I don't know about you, but I feel like we needed that, especially given how challenging 2022 was. Now, investors are certainly very bullish today due to some of the employment cost index data that showed lower than expected increases in compensation in the last quarter of an amount of 1%. Now, this news also provided many people who are taking a look at the financial markets and, of course, looking at their 401ks, investments. This is like a measure of confidence. We know that inflation, has actually quieted down a little bit in terms of how quickly it was increasing, and that's a good thing. And we know that the Federal Reserve is going to be increasing interest rates probably here again this week. But the expectation that it's going to be a smaller increase. And in fact, we're hearing a lot about just a quarter point increase from Fed Chairman Jerome Powell. And that could be a signal that maybe things are going to get a little bit better here in the financial markets. And maybe inflation will get more reasonable. I don't know about you, but I'm just hoping the price of eggs goes down. And of course, with that, investor sentiment continues to increase. And of course, that the stock market continues to go higher for 2023. That's what we need. You know what? It's been a long time. I think we need some consistency and we need some dependability. And I think we should celebrate by having a great stock market for 2023. I don't know how you feel about it, but that's my goal. That's my hope. And I'm going to wish that for all of you, for those of you watching. And of course, a big shout out and welcome. I see a lot of friends on our show today. Thank you so many different platforms, from LinkedIn to Twitter to Facebook. I see YouTube. I see many, many people. And of course, I see Vicky Garvey joining us on Facebook Live, and she's sharing some comments, positive news. It's great to see you, Vicky, and thanks so much for joining us once again. Now, of course, we had good news, but there's also some bad news. In fact, now if you find yourself still working, happily working, still collecting that paycheck, congratulations, because unlike the news that we've seen in the last few months, whether it be in the tech sector or in hospitality or travel, financial industry as well, many people, many companies, in fact, have been experiencing pretty deep cuts in the workplace. A lot of layoffs occurring. In fact, today, PayPal just announced that they're going to be cutting 2,000 jobs. When you think about jobs, it sounds like, oh, it's just 2,000 jobs, but that's actually 2,000 people who are going to be stressed out, wondering how they're going to make ends meet. Hoping they get a new job pretty quickly before they have to make payments like rent payments and mortgage payments and paying for their kids to have food on the table. So these are all people. We're talking about, we're hearing some huge numbers. PayPal unfortunately announced that this is about 70 not 77% of the PayPal workforce. And this is in the coming week. So for those of you, if you know someone that works at PayPal and just who feels overwhelmed, isn't sure how they're going to make ends meet, and is in need of financial advice, definitely, make sure that they seek out that. No, there's a lot of people out there that will be able to help during this time. I mean, we've worked with tons of people during these transitions, and that's experience that's very, very helpful right now. So PayPal has announced this 2,000 employee cut because they're saying that times right now are challenging. In fact, they're saying challenging in the macroeconomic environment. This according to Dan Schumann, who many of you know is the CEO of PayPal. They're saying, well, despite progress in focusing resources and making sure the costs are reasonable, they said this still has to take place, and are hoping that this is going to address some of the financial challenges that the company has had in the last few months and last year. So, wish you all the best, PayPal. Hopefully, you can dig yourself out of that. And of course, for those of you employees out there, um, you know, do do check out resources. Check with your HR. Check with your benefits department, and certainly check with financial firms who have a lot of experience in working with those who go through this transition. There's a lot of resources available that can help. All right. Now let's talk about something positive once again, and that is the January indicator trifecta. The question is will this continue through the rest of this year? Now, the US stock market is off to a very strong start as we finish up today, the first month of 2023. Despite concerns of potential economic recession, that continues to be the case if you're reading the news. But the January indicator trifecta, I definitely wanted to share this with you if you've never heard this term. It's actually very, very bullish, given that the S&P 500's a 20% decline in 2022. This is good news. Analysts are really cautious about whether this is actually going to take place, but they're saying, well, with the Federal Reserve's determination to continue to raise interest rates and like mitigate inflation and sort of help us navigate, so potentially not having economic downturns, fingers crossed. Well, the Fed is expected, of course, to increase interest rates, but there are still reason to be optimistic because according to the Stock Traders Almanac, the current bullish trend, this sort of trifecta, if you will, the US stock market is very significant given how terrible performance, well, the financial markets were last year. This makes the full month of 2023 that much more notable. So, this trifecta refers to three seasonal indicators in the stock market that has in the past predicted its direction for the rest of the year. Now, these indicators are the Santa Claus rally, that's one, the first 5 days early warning system, making two. And lastly, the trifecta is the January barometer. Now, these were originally recorded by Yale Hirsch in his Stock Traders Almanac in 1972. Now, for those of you in the financial industry like myself, this is something we're very much familiar with. The stock market, of course, is on pace to hit this trifecta with the S&P 500 showing lots of steam today. This is expected to continue, hopefully, into this week. We'll see. But this could mean that because of these three positive numbers, that they're pointing to a pretty bullish market for the rest of 2023. So for those of you who are invested in your 401k, your 403b, your Roth IRA, your traditional IRA, your stock portfolio, and everything else, this is probably news that you've been wanting to hear. And if you've been sitting out and you haven't been investing, or you're thinking of it might be time to make an update or review your portfolio, this is your alarm to get started and to find the resources and people to help you with that, right? Now, of course, we know that this is just just something fun to talk about. Who knows if this is necessarily going to take place, right? Because what we've seen, past performance certainly doesn't mean that this will be the future result. the trifecta of indicators, it just sort of gives you a general sense of the market's momentum, and it gives investors something to look forward to, some insight into the potential future trend of the stock market. So for those of you who are watching, I hope that you enjoyed that information, and hopefully it gives you some optimism as we go into the end of the year. But if you haven't done so already, here are some tips that come from me. Okay. First off, if you haven't already, I want you to start saving more into your 401k or 403b at work. Now, many of you have company employer matching, and that in many ways is like free money. So make sure that you're contributing to your workplace retirement account if you can. Of course, I know that some people have student loans, have credit card debt, they have a lot of other uh, big underlying budget constraints. And so you might not be able to save as much as you want to. But for those of you who are able to, make sure you don't discount the power of saving in the workplace through your 401k or retirement plan at work. Now, assuming that you already are doing that, or maybe you don't have a plan at work, what else can you do? Well, you should definitely take a look at the traditional IRA or the Roth IRA. Now, for those of you who've been following my content, you know I'm a big fan of the Roth IRA, and certainly this is an area I think many people should consider. And for this year, you can contribute up to $6,500 into the Roth IRA and the traditional IRA. And if you're over the age of 50, you get that bump, and then that's that $1,000 that you can contribute as well. So try to do that as soon as you can. And for those of you who are parents, don't forget to put some money away into your kids' college savings account if you're planning to save for that need as well. So lots of things to think about. We're going to continue to give you more tips and tricks, and of course, show you and talk to you about some of the trending news that we continue to see this year. Now, tomorrow, we have a very fun show with In the Loop with my co-host on that show, Greg Nibbler. If you haven't done so already and you've already been seeing some things trending that you think that we should talk about on the show, definitely share that to me. You can reach me on pretty much all the social media platforms and send me a direct message. They're generally open or certainly open on Twitter, and I'm at Winnie Sun there, or you can just post it publicly and tag me at Winnie Sun so I can thank you for that comment. And so, there's so many things that are happening in the world that we might not catch all of it given just how much information is being shared. So do me a favor, share with me what's interesting to you. And of course, if you have any specific questions that you had and have, definitely don't be shy. I have reporters reaching out to me almost on the daily asking for advice and insight and whatnot onto personal financial matters. I'd love to help you out if I can. Do me a favor and take a moment to like and subscribe. You can find full episodes of Level Up with Winnie Sun on NASDAQ, Amazon Fire, Samsung, Roku, and many other places. And of course, don't forget to check out Yes Factor with Winnie Sun on Apple Podcasts. That's with the LinkedIn Podcast Network. Now, thank you so much for tuning in. I look forward to seeing you tomorrow. Be well and take care. Bye-bye now.